As a portfolio manager, the task that I have in front of me is to create a portfolio of 10 stocks or securities out of a pool of 50 stocks or securities. So for doing that, I have gone to the basic source of macro data, which is country's GDP. And what I want to extract out from this is seeing the GDP, and what I'm looking for in my stocks are qualities that drive GDP for my country. So for doing that, this is a breakdown. This is a breakdown of the country's GDP. As you can see, it's broken down into agro, into industry, into service. As you can see, majority 50% stronghold in service, good amount of stronghold or strong position in industry as well. Agro is shrinking, and that has been the case for Bangladesh for a very long time. So what it tells me is that Bangladesh in the long-term future has few vested interests in terms of industry and in terms of service. So industry-wise, what I'm looking for are qualities associated with production, manufacturing, building, developing, reconstructing, and in general manufacturing. On the service side, what I'm looking for are companies with name values, companies that do certain things such as integrating technology, being up to date with latest innovation, and incorporating those certain sets of innovation in their production line to provide the best available service that they can provide. So this is a breakdown of all the qualities. This is not an exhaustive list by any means, but this basically serves as a catalyst for me to pick the 10 stocks that I want to pick. And voila, this is the list of the stocks, the 10 dream stocks that we have picked from a potential pool of 50 real fascinating stock sets or pools of stocks, as I mentioned. And we have incorporated few methods to ascertain as to what sets of stocks we would need in what sectors and in what industry. So a huge part of that was the process of elimination. We had some basic markers set way before this tournament even began, and since then we have been keeping in touch on the latest ongoing news. Based on those two things, we had to eliminate few things and few stocks. For instance, stocks that are stuck in the floor price, that have no way to generate profit for me and my portfolio. Anywho, we have to now move on to discussing at least two stocks, justifying basically to the degree that we can in the short time frame. But we have picked Beximco, and we are also going to describe Singer, but starting with Beximco. Beximco is fascinating. Bangladesh export and import company, Beximco. It's fascinating for the following reason. Historical data that we were provided to 2015 to 2019, it shows that it has a negative return, has a quite deal of variance as well. However, me and my team decided to include this stock in our portfolio. I think the obvious reason is obvious to everyone, because it is going to provide you a great deal of return after the fact, but we're not supposed to talk about it. We are supposed to talk about what would lead me to believe in 2019 that this stock has potential for me to keep in my portfolio. So what we did was a story or a motto. For instance, the motto is economy operates in cycles. So what you see in 2015 to 2019, that GDP of this country is on the rise. Economy is expanding in general. Also, stocks in the Bangladeshi market, the DSC index, the general index, is on the rise as well. It is going up. The country is expanding. However, if you see the 10-year treasury bond rate, it is going down. It tells me one thing. It tells me that there is less uncertainty, or there is lack of inflation. There is the level of inflation may be rising, but not to the extent that it would drive up the risk rates or the treasury government bond security rates higher. So that communicates to me that the economy would take a turn. Question now is what would trigger that? It could be any uncertain and unexpected event that didn't occur in human history for, I don't know, 100 years. It could also be any small things happening in a foreign country, I don't know, maybe a war, that would offset and disrupt the supply chain and the distribution channels that we have, and that would set a chain reaction that would trigger something that would cause economy of our country to suffer, and the 10 post companies of this country to suffer, because the regular deviation would be there. So based on that, we have picked two companies in this sector. Again, this is predominantly an industry based selection process: Beximco and Bangladesh Shipping Corporation. The rationale, again, because Bangladesh, I would like to draw attention to the fact, heavily relies on exports and imports, and there has been some great developments in recent times on the R&D front, and the RMG front, and as a result we have good reason to believe that Bangladesh is going to go into that direction. And to facilitate that, we always are in need of exporting and importing. Also, majority of those transactions and delivery after the transactions take place to the sea route, and you need shipping for that. So this is the rationale that we have been given, provided. Also, the other counterpart to that is the service part. Here we have Singer Bangladesh Limited. Singer is a great company. Everyone knows this company, and had a return that is 4.5%, again lower than the ongoing risk-free rate for that period in Bangladesh. However, we have another motto, if you will, for service companies in Bangladesh as well, which is, if there is name value, it would drive up technological stock prices. So household names drive up manufacturing value is the core motto here. What it essentially communicates to you is, if your company has a name value, and if your company pays good emphasis on in reinvesting some of its capital in R&D, is looking at long-term innovation and long-term quality control, there's a high possibility that at a future time frame landscape, this company is going to go up compared to other companies in your portfolio. Precisely for this reason, we have selected Singer, Beximco Pharma, Square Pharma, and Bergerpen. Everyone knows these companies. There's nothing else to outline. Finally, this is the optimal portfolio that we have created for us. Again, I think most people would worry, and most people, even we, had to contend with the fact that this has a low Sharpe ratio, basically meaning that we are barely making it, which would not be acceptable under many circumstances. But with the hindsight in our favor, we have opted for this anyway, precisely because we have some additional elements to address. For instance, the holding period return calculation based on the data from 15 to 19 would be something entirely else compared to the returns that we got, because we have a fear, which is the return numbers that we got was not adjusted for dividends and was not adjusted for stock split. So exactly the exact opposite we did for holding period returns for 2020 to 2023, which is, we took that data, we adjusted that for dividends, we adjusted that for stock splits, and then got a holding period return which I suspect would be different from an average return. For that, we had to do a geometrical mean as opposed to a arithmetic mean. We did split ratios and multiplied that split ratio here in full detail to calculate holding period returns for individual years, then added them up. As a result, this is the portfolio depending on the sector, and the ultimate result would be delivered by my teammate.